We first introduced art to our real estate guys tribe at our 2020 virtual investor summit and had amazing response from folks who had no idea about oil. If that's you, pay attention, because up next, Art Berman. Art Berman is a working geologist and has been in the industry for more than 35 years. He makes appearances all over the media about this, and when he's not in the field working, he's talking about oil. Please welcome our friend Art Berman. Hey, how are you, Art?
Very well, thanks. How are you guys?
Really good. Good to see you, and we appreciate you taking time of your busy schedule. A lot going on. I think the big paradigm we want to break right out of the gate is that oil isn't just another commodity. Oil isn't just something that investors watch the price go up and down and see the price at the pump change. But as you say, oil is the economy. Can you kind of help us wrap our brains around that?
Yeah, sure. And that's a little bit of a paradigm change for most people. Most people think that money or currency is what the economy runs on, and of course that's fine. I mean but the important thing to understand is that currency is really nothing more than a claim on work. And so back in the many centuries ago, millennia ago, if I needed you to do some work for me and I had some extra grain in the barn, I could say, well, listen, I'll pay you 3 bushels of grain if you go and dig me a ditch. And you might say, okay, and you might not. And that worked for a long time back in the barter economy. Well, that got a little cumbersome. And so eventually people invented money, which was basically just a proxy for bushels of wheat or whatever the commodity was. And so over time, we sort of forgot about that. But money, at least until recently, the last 40 or 50 years, has always been backed with something. And that something is always convertible into work, which is human calories or joules or the work of an oxen or a draft animal, whatever. And over time, as we have developed our sophistication in using energy to do work, we've gone from human labor, draft animals, to wood and wind and sun and coal, and eventually to petroleum and nuclear and many other things. But so if currency, money, is just a claim on work, and most of the work that's done in today's economy and has for certainly since World War II has been done by oil, then oil is the economy. And it's just that simple. It's not a partisan statement that I make as someone who works in the oil business, nor is it something that I even understood or appreciated probably until 10 years ago or so. But that's the way I see it.
Yeah, I love that distinction. If you think about it, how do you store wealth? You might store wealth in real estate, or you might store wealth in gold. How do you store labor? Well, oil is a great way to look at that. It's stored energy for use later on. And in fact, it's the primary energy source. So you mentioned, solar and wind, and you mentioned nuclear. There's lots of ways that we get energy. There was a lot of talk, ages on. I remember I was a petroleum transfer agent back when we had gas rationing, and in California, you could only fill up your tank when it was odd or even number of day based on the last number in your license plate, and that was something. And we were going to run out of oil. And then all of a sudden, well, no, we're not. Cars become more efficient and so on. Technology to get the oil becomes more efficient. But here we are all these years later, and the predictions that, well, oil's fossil fuel, it's limited, we're going to run out, we'll be out by 2010 or 2020. But here we are. Why is it that oil is still so predominant?
So there's a couple of points in all of that you said. The first part is that people always think that the end is near. I mean, that's just seems to be part of our psychology, and we can leave that for the psychologists. The 3 of us don't need to get into it. But so human beings always think that the present time is both the pinnacle of development for all life and the only time when humans have ever had the capacity to destroy themselves, civilization, the planet, and possibly the entire universe. It's been that way since human writing began. So humans have felt that since certainly the time of Socrates. Everything's going to hell.
Yeah.
Okay. Well, so what's happened in modern time is that we have found this substance called oil, which is the densest form of energy that is economically and just practically useful. So basically, a barrel of oil, 42 gallons, if you will, contains the equivalent of about 4.5 years of human manual labor. Again, that's in calories or joules or something. And the documentation, that's actually a pretty conservative estimate. I've seen estimates as high as 11 years. So when people talk, and they do, and that's fine, that solar and wind are getting so cheap that basically they're you're going to get it for free. Well, I'm not going to argue whether that's true or not, but cost is not the whole story. Okay, so what can you do with if you can imagine a barrel of wind or a barrel of sunlight? Well, not too much. And again, I'm in no way disparaging the importance or the necessity of renewable energy or any form of energy. I mean, we need them all. Let's be honest here. So again, not a partisan statement, but there's just no way that we know of to cram so much work into such a small space. And oh, by the way, you can move it around. I mean, natural gas, you mentioned the natural gas is nice stuff, but pretty hard to pour into your gas tank, at least
Yep.
for right now. Electricity's great. We're using it right now, but if you don't have a wire, you can't use it. Oil, you can move it around. You can, go to the gas station, get a can full of gasoline, put it in your lawnmower. I mean, there's just a million things you can do with it. So oil is kind of special. The other thing I want to say is that technology. I mean, technology is obviously crucial, but technology doesn't produce energy. Technology is the spigot or the faucet, if you will. Technology is just how we convert energy into work. And so today people think, well, technology's so great. I mean, we've managed to produce oil from shale, and isn't that fabulous? And it is, by the way. And we're able now to collect solar energy and wind energy and actually use it. But the technology doesn't make the energy. Okay. And so there's no way in the world that you're ever going to be able to take the source of that energy, let's talk about solar, and have it be any more dense than it is right now. And similarly, you can't make oil any denser than it is right now. It's just the observable truth that oil is dense stuff. You can get a lot of damn work out of a barrel of oil. And when people talk about how solar or wind is going to replace oil, well, maybe it will and maybe it won't. That's not what we're here to discuss. But the bang for the buck per unit of space, you just can't beat oil. And that's why it runs the world. And that's why oil is the economy.
And oil really is baked into everything that we do because the products and services we consume often have to travel. The bits and pieces of them do. Sometimes we have to go get them. Sometimes they're delivered. Rarely do the things we need show up at our front door without any work or without any help from oil. And so that's another thing people have a hard time getting their mind around, is that the price of everything is also including what it costs to put oil into the equation.
Well, that's right. And that fact is either lost out of ignorance or forgetfulness or just lack of knowledge. And so back to solar panels, for instance. Well, what's a solar panel made of? It's There's some special metals in there, just like or in your cell phone and in your car. Where's the metal come from? The metal's mined. How is the mining accomplished? Mostly with diesel equipment. It's got to be shipped someplace to be manufactured into the form that we want it. How's that accomplished? Ships. They use basically diesel, bunker fuel. Okay, then it's made, it's got to be moved around the world, it's put on ships again, shows up somewhere, let's say in the United States. If it shows up in LA and you're in St. Louis, how does it get to you? It gets there by a truck. Truck runs on diesel. So there's an awful lot of oil that's built into every aspect of the supply chain that brings you, in this particular case, a solar panel. Now, for those of you who have never seen a wind turbine installed, oh my gosh, I mean, there's so much equipment out there, you can't believe it, and it all runs on diesel. So my point is not, as I said before, to diminish or disparage the importance and the necessity of solar energy. It's just there's a lot of oil that goes into it. And are those costs adequately expressed? And the answer is not so often. And then the final piece of that is, since the sun doesn't shine and the wind doesn't blow all the time, in some places it doesn't happen very often, every solar or wind facility has to be backed up, because I want power right now when I need it. And that backup is commonly done with natural gas. Okay, so that costs money, and not just the gas itself, but the construction of all the equipment. And so again, you just can't, you can't segregate all of these things in nice little simplistic packages that say, oh, we can go to 100% renewable. No, we can't. We might want to, but we cannot. We simply cannot. Is there a time when we ever may be? Yeah, possibly. There's technology. But if oil is not part of that equation, then you're doomed to doing it in a hugely inefficient, unproductive way, which both costs extra money, increases the price of whatever you're doing, and unfortunately probably means that we're going to live in a lot poorer world if we end up with 100% electric renewable. And again, that's not my wish. That's just the way the physics of energy works. And most of the advocates for any form of energy just don't understand that, and I don't expect them to. I'm a scientist. That's my field. You're not. You're asking me. I'm explaining.
That's great. It's kind of looking at it as the way that alternative energy sources, as great as they may be, really can only supplement, and they overlay with the use of oil, as you mentioned. And I think the reason we want to talk about this from a real estate perspective is, one, oil comes out of the ground, and on the investment side, there's, tax incentives and things, and we maybe get to that, maybe not. But then also the fact that it touches so many areas of our lives. From a practical point of view, real estate owners, investors have tenants. Tenants' ability to pay their rent is very much influenced by how much it costs them at the pump to pay for gas. When prices are low, like they are now relatively, that gives a discretionary income to our tenants, and that's great. When prices go up, people have to make decisions, and that's part of an interesting part of the oil and energy business is how it's priced. You hear a barrel of oil is so many dollars today, and that seems to change. How big is that market? How does that pricing get determined? A few weeks back, we saw prices go negative, which is hard to get your mind around. Talk us through, kind of supply and demand and the pricing of oil.
Well, oil is the most heavily traded commodity in the world. So don't need to go into any more detail than that. And the way that price is determined, I think, is pretty similar to most commodities. It's a price discovery process that happens by people trading futures options, basically. And so when the price of oil goes up, generally there's always someone on both sides of that trade. Someone thinks the price is going to go higher. Someone thinks the price is going to stay the same or lower. There's what's necessary for a trade. Someone's going to lose and someone's going to win, and that's what makes the world go round. Negative oil prices have never happened before April 20th, 2020, and it's a pretty controversial subject among commodities traders right now, probably being investigated by the SEC. How in the world can something as useful and valuable as oil, particularly as the number one traded commodity on earth, how can it ever have negative value? And the answer is pretty simple. It's a futures arrangement. Every futures contract has an expiration date on it. And for reasons that I don't understand and probably nobody understands, a whole bunch of people seem to have forgotten about that. And so they were holding a lot of contracts whose end, if you don't sell them before the expiration, somebody's going to come and say, where do you want the oil? And most of the people that trade oil futures would not know what to do with a barrel of oil if they ever got stuck with it. So all of a sudden, whoever hadn't rolled their contract over before the expiration was stuck in a position where they had to basically pay someone to take it, because in that particular circumstance, we were very close to filling up all the storage in the US. And what there was already leased by someone else. So if you didn't have a lease on some of that storage and you hadn't sold your contract, your choice was pay someone to take it off your hands or have it delivered on your front lawn. And obviously you don't want the latter, so people paid $37 a barrel to someone who owned the storage. What a great deal for them. So it was kind of a fluke in a way, but it happened. Nonetheless, we can't take it back.
Well, and obviously, quickly went away, and that was just for a nanosecond in time. But I think the reason it's interesting to bring up is just to point out that oil is more than a commodity in that way, because of the way that it's traded and the way you have to think ahead. Many companies think ahead, airlines and companies like that, and they actually participate in these futures contracts, which allows them to kind of smooth out what it costs them as the prices may ebb and flow. We're here after these few weeks of the price being low, kind of headed back up. I know you don't have a crystal ball, but I know you study this stuff. What would you expect we'd see in terms of pricing of oil in maybe the rest of this year and in the future?
I don't think it's going to get any higher than it is right now. If it does, and again, I don't have a crystal ball, but I've got some pretty reliable analytical tools that I use. And by my reckoning, the ceiling is about $42. And this is for West Texas Intermediate. Add a few dollars for Brent, the international standard. And that's based principally on a time-honored approach that looks at how much oil is in storage versus its price. And that's the way that markets work. Markets are always looking at how many days of cover do we have? Do we have enough oil, to get us through the season we're in, where we need to do a lot of farming and we need to do a fair amount of heating with heating oil, at least in the Northeast. Markets think that way. And so markets are always trying to maintain just enough supply so that they can get the cheapest price for that supply. It's just the way markets are. And so when I look at storage, which is very, very full, not just in the United States, but all over the world, markets look at that and they say, I don't see that there's much security issue going on there. Why should I pay more than what I'm paying right now? So the price rally that's led us from negative 40 almost to positive 40, most of that is because you're starting at such a low point. Oil was so grossly underpriced that there's only one way for it to go. And that's part of the reason that some people are suspicious about that. What a great way to manipulate the market. If you can bring it down below zero, how can you lose money? in the ensuing days or weeks that follow, because you know it's going to go up. And similarly, how did it get that low? Same question. Again, that's not my specialty. I'm not a regulator. I'm just a guy that works in this business. But those are the kind of questions people are asking, and I think legitimately.
Or you made a great case for oil being around to stay. At the same time, we were introduced to you by our friends Adam Taggart and Chris Mortensen, and they certainly talk about this idea of peak oil. When it's a depletable resource. Apparently, you can maybe correct me if I'm wrong there. But long term, we get more efficient. We're able to squeeze more yield out of a barrel of oil. We've seen that, from carburetors to injection. We've seen that in just lots of ways that technology, though not creating energy, helps it go further. What are your thoughts on peak oil and what happens in terms of the technology to get it out of the ground and how that might affect pricing in the long term?
The technology to get it out of the ground will always cost more. And so we think that we've thought we're in a period of cheap oil since the last part of 2014. But if we take the price of oil and convert it to May 2020 dollars and compare what a barrel of oil cost in 2000 versus what it cost in December 2019, it was actually 35% higher. And that's a direct result of this miracle of tight oil. It doesn't, the technology isn't free. And so back in the simpler days of pre-tight oil, if I wanted to drill a well, I drilled a vertical hole in the ground. And let's just say for argument, it cost me $2 or $3 million to drill down to 10 or 12,000 feet. And that was it. It's a lot of money. To do the same, to get to the same depth and to turn it horizontally and drill out a mile or so or whatever the average is, and pump in all this stuff, water and sand, and frack it, if you will. That same well is now going to cost somewhere between $6 and $10 million, depending on where you are. And yeah, the production rates are higher, and they better be, or else you're never going to get payout. You're never going to get that initial investment back. And so that's the part of the technology that I think the average person just doesn't get. And I don't expect them to. That's what I'm here to do, is to explain it. So the peak oil concept, peak oil is a simple concept, and it says, well, we're not making any more of it, or we're not making any more of it fast enough to matter in the time frame of human civilization. It takes millions of years to produce oil in the earth. And so at some point, we're going to run out of the stuff, or we're going to use enough of it that it's going to be a problem. And back to where we started, humans always think that the end is near. And so we've gone through, there was actually an oil shortage scare in the 1860s, if you can believe it, in the United States. And we always think that stuff. But I think in the case of peak oil, Adam and Chris are right. And I don't think either of them would say that the problem is we're going to run out of oil. The problem is that a barrel of oil is going to be so expensive that the economy cannot survive under the burden of, just make up a number, $150, $200 oil. We're talking about how the price of oil in real dollars is a third higher than it was 20 years ago. Well, if energy is the economy and I'm a small business owner, which I am, that says that my cost of doing business has gone up 30%. Anybody want to know why the economy hasn't grown very much since 2000? Well, there are a lot of reasons, but number one reason, it's because of the price of oil. So if the price of oil doubled from here, what would happen? Well, it'd be terrible. Almost nobody could make money. The price of oil doubled back in the 1970s. You were talking about rationing gasoline. Well, we won't talk about why that happened, but the price of oil doubled and the world went into an economic recession for most of the 1980s and 1990s. Pretty straightforward.
So, Art, we've talked a little bit about supply and demand, and I think most of our audience understands supply and demand. And, sometimes it's hard to get your mind around how much supply is there. I think obviously we know in the COVID-19, demand fell off. That created this big upside down glut, upside down price and glut. But there's another aspect to oil, and that is how it's used geopolitically. And I think with what's going on in the world with China and the simple part, like the rise of China, the consumption of oil, but also some of the animosity towards Russia, which has been a big oil producer. And your mission in life is, the way it's on your website, is always thinking about how new data will affect prices. Can you talk a little bit about what you see, if you have an opinion, or maybe you don't, just about how the role of oil in geopolitics ends up having any type of an impact on pricing?
Well, there's a lot of people who probably wish I didn't have an opinion on something when it came to energy, but unfortunately, that's what I do. And so, yes, I have an opinion about that. I think the most important thing for people to understand about geopolitics, the three biggest oil producers in the world as of 2019, pretty much in order. United States was first, Saudi Arabia was second, Russia was third. There's a lot of other countries that come in respectable places, but U.S. oil production in 2019 was more than 12 million barrels a day. That's a whole lot of oil by anybody's standards. And so it's not surprising that sets up a geopolitical struggle, if you will, between those three countries. Because, let's face it, wars are always fought over resources, and oil is the master resource. So what a surprise that conflicts might arise around oil. You talked about China. China's not one of those big producers. In fact, China is the world's largest importer of oil. So that sets up a fascinating dynamic. So when Franklin Roosevelt finished his meeting at Yalta with Stalin and Churchill, and they essentially redrew the map of the world as the victors in World War II, what most people don't know is that his next stop was in the Red Sea. And the King of Saudi Arabia and Franklin Roosevelt sat on the deck of a U.S. aircraft carrier and worked out the arrangement between the two countries, which persists today. And the deal was, you, Saudi Arabia, guarantee us, United States, a secure supply of oil, and we, the United States, will guarantee the survival of your monarchy. Straightforward and simple. Now, it's a funny thing because in 1945, the United States produced more than half the oil in the world. Saudi Arabia did not. We were 100% oil self-sufficient, but Roosevelt was surprised that the U.S. had won World War II because we got bombed, our Navy was taken out, we weren't prepared for war. And so he set up a commission to study that. Why had the United States won the war? And the answer came back because we had better access to oil than our enemies. And Roosevelt said, got it. And so here's a guy who was way ahead of his time in his thinking, whether you like him or dislike him politically. He saw the future of oil. So the foundation of U.S. foreign policy, certainly in the Middle East and probably in most of the world, has always been secure the oil. Do whatever you have to do to balance the powers in the Middle East who all produce a lot of oil so that we get what we need. And you want to go back and understand the Iraq War, the first one with Bush Sr., the second one with Bush Jr. It was all about oil. And unfortunately, Bush Jr. and his neocon advisors didn't get it. They went in, they did what they thought was right. They took down Saddam Hussein, completely screwed up the balance of power in the Middle East. Iran became ascendant because Iraq was in ashes. And we've been trying to patch that thing together again for the past 15 years. And we're not there. We've been in Afghanistan, we've been in Iraq, all because we messed up what US diplomats and military people had worked so hard to put together for 100 years, basically, 75 years. So geopolitics is crucial. It's absolutely crucial, and oil is what drives it.
You know, I want to take that a step further if I can, Robert, just because, you know, I read an Economist article, I don't know, way back in the beginning when shale oil in the US was ascending and it was putting downward pressure on Saudi Arabia. And Saudi Arabia allegedly lowered their price to drive shale oil producers out of business. I had a, excuse me, I had a different theory, and I could be completely wrong, but I remember watching the United States put a lot of economic pressure on the Soviet Union through its weapons buildup in the Reagan administration, and ultimately landing the Soviet Union in bankruptcy. So it was like a financial war. I see some of that going on right now between the United States and China. So we'll see. But with Russia, so much of their economy is based on oil production. And, you know, again, I don't know what you look at, and maybe this is germane to the conversation or isn't, but do you think that hostility towards Russia, either on the part of the Saudis or on behalf of the United States, was any part of that oil price war at that particular time? And if it was, I mean, what do you see happening now as we're going forward, since there's obviously continuing tension between certainly the United States and China, and then China's cozying up with Russia?
Sure, Russell. There's a lot there. Let me say from the outset that I think that entire hypothesis of an oil price war, you know, the Sheikh versus Shale, I think that was a cover of Time magazine. I think it's ridiculous. It's absolutely preposterous from my perspective. Okay, now I just told you that Saudi Arabia and the United States have had an arrangement since 1945 that we are partners in oil and politics. Now, presidents come and presidents go, and some of them are nicer to Saudi Arabia than others. But do you really think that a country that still relies almost solely on US assistance for its continuation is going to have a war against that same country's oil producers? I mean, does that make any sense to you?
It didn't
Because
make
it
any
doesn't
sense to me at all. And that's, but yet that's what was being put out there. And I thought something else is at play here.
Well, you're right. So let me just say that most of the people who write about oil, and this includes very sophisticated, smart analysts for investment banks, including Goldman Sachs and Bank of America and Barclays, none of these guys has worked a day of their lives in the oil business. They don't know anything more than what they've learned. And again, I'm not disparaging them. They're smart. I listen carefully to what they say, but they don't have any background or experience in this industry. And so they dream up these ideas that sell magazines or clicks or whatever, and everybody would like to hate Saudi Arabia because they've got what everybody wants, which is an incredibly wealthy country for no very good reason except that they happen to sit on top of a lot of oil. So people love to hate Saudi Arabia. I don't hate Saudi Arabia. I will criticize them when appropriate, but it's an easy sell. And so The Economist, and I mean, I can't think of hardly any news source in the world that hasn't latched on to that silly meme, and it is a silly meme that does not begin to explain what's going on. But back to your point, another thing that most people don't know, maybe they should. Vladimir Putin. First of all, he's a PhD. Most people don't know that. His dissertation was on oil. His degree is in economics, and he wrote his dissertation on the mismanagement of Soviet oil resources. And his thesis was that the Soviet Union fell by failure to invest enough money in its oil facilities and infrastructure. That for all the reasons, maybe some of them are memes too, as to why the Soviet Union fell, this one guy who happens to be the most powerful guy in the Soviet Union believes it had everything to do with oil. So I just described the guy that runs Russia as having written a dissertation on why his country fell apart. Just described Franklin Roosevelt and the King of Saudi Arabia in 1945, and there's the three of them. There they are, right there. And then there's the odd man out. There's China. Now, China doesn't produce no oil, but it doesn't produce nearly enough. And so China right now is in a situation where they are trying, I believe, to flip the game from oil being a seller's market to a buyer's market. China is doing everything it can. It's buying as much oil to store as it can possibly get, and it is cranking that through its refineries and dumping cheap refined product on the world, all for the purpose of driving down oil price. Now, nobody has a deal with China. And so if China can maintain the glut of oil, and let's be clear, not only don't oil traders know what to do if a barrel of oil shows up in their house, but none of the rest of us do either. We don't use crude oil for anything. We use gasoline, we use diesel, we use asphalt, we use jet fuel, we use refined products. So China doesn't have a lot of its own oil, but China's got a ton of money, a lot of credit, and they got a lot of refineries. So what they're trying to do, I believe, is to turn oil into a buyer's market. And you can imagine the savings to a country like China that imports 10 point something million barrels a day if the price of oil is $25 versus $50. It's immense. So that's my long-winded but much shortened version of oil and geopolitics for you guys.
Well, we're going to need to get you on the Investor Summit next year, because I have, several follow-up questions regarding Iran and Venezuela and China's, kind of following the game plan of the United States, lending money to distressed nations in order to get access to infrastructure and resources. And I could probably comment a little bit, at least ask a lot of questions. So maybe I'll save that for the next conversation, Art, but I definitely remind me, because if China is willing to buy oil for the sake of dumping oil to manipulate the price, then that doesn't make sense unless there's something else at play. And I think, well, if they're trying to weaken financially a place like Venezuela or other places that are being sanctioned by the United States, so that they can then loan them money and end up having, indirect access to their resources, and then forcing them to have to earn yuan in order to repay that debt, they're following the blueprint that the United States used to become the world's reserve currency. And I see that happening in multiple places. That's my personal fascination with oil, its relationship to the US dollar. That's why I asked the geopolitical thing, because obviously from a practical standpoint, as real estate investors, as Robert mentioned, the cost of oil affects the debt markets, which potentially affect interest rates, certainly affects dollars, the flow of capital, import, export. It affects the cost of living for tenants and working class people and the production of everything in the economy, including the development of real estate and all the components thereof. So, I mean, there's a lot of practical reasons to understand it, but as you work your way up the food chain, and I know that's where you spend all your time looking at all these machinations that are going on at the macro level that trickle down to price. I just felt like having the geopolitical conversation would be interesting, and it ended up being more interesting than I thought it would be. So I'm going to want to follow up on that at some
Sure.
point when we have more time.
Well, obviously, oil has a lot more interesting conversation than you may have thought when you tuned in. So, Art, we sure appreciate you, and we'll hear more from you at the panel at the end, but it's been great getting your take on this. Thanks, Art.
It's been a pleasure. Thank you, guys.
There's Art Berman. He talks a lot about oil, and he's in the business. Lots more coming up on our Crisis Investing webinar. Well, I am guessing that most folks who are watching the webinar series have for sure learned something in this segment. Oh my goodness, what a brilliant guy and a nice guy, Art Berman.
Yeah, no surprise that he delivered big time. And it's not just about charts and graphs and oil prices or production counts, but it's really both the philosophical and structural role of oil in the economy and in society and in human history. His background in history is very interesting as well. So very enlightening. I hope that inspires people to pay closer attention to what's going on in oil. Whether you choose to invest in it or not is really beside the point, because it's inescapable. It's like saying, well, I don't really want to have anything to do with air or sunshine. You can't not play. Right. And so, energy is going to affect you. It affects interest rates. It affects the cost of goods and services. It is another one of those canary in the coal mines with respect to economic activity, not so much currency, although it does have a role in understanding currency. But clearly, when you see energy consumption going down, you know that the economic reports that are going to follow are going to show that the economy has contracted. And so energy really is a leading indicator of that. And I didn't know that until I started listening to Art Berman.
So now you know why oil as a commodity makes a ton of sense to pay attention to, as do the precious metals. Our last commodity is up next, and it's the commodity of real estate with our good friend Ken McElroy coming up.
Hey everyone, thanks for watching. Before you go, 3 things. Number 1, click the subscribe button, because when we have more subscribers, it makes it easier for us to attract better guests to share great content with you. Number 2 is click the notification bell to be sure that you're notified when we put up new content. This is obviously an ongoing situation. We're going to have continuous discussions about it. You're going to want to make sure that you're kept up to date. And then number 3 is make sure you share it. Tell a friend. Help us flatten the economic curve by getting more financial education out there to people who need it. Okay, so you know what to do. Click the subscribe button, click the notification bell, and we'll see you in the next video.
Systems break, and suddenly your family, friends, and neighbors are distracted with Wall Street stock indexes and Washington political pandering. Many are unaware and unprepared. Like COVID-19, ignorance of looming financial perils is also a disease, and the system is fragile. But you can help. Financial education is the vaccine. Share this free video series while there's still time. Alert people to these serious issues. If things turn quickly, the financial support system could be overwhelmed to the point of collapse. Help flatten the curve and reduce the impact on the financial system. Wake up more people to prepare. You have nothing to lose and a lot to gain. Share this video directly or invite people to visit crisisinvestingseries.com.